What's going on, everyone? Dane the Mortgage Guy here. Today it is 7:43 in the morning that I'm recording this video, and I wanted to get this video out to you guys because I know that there's a lot of questions, a lot of people freaking out right now, and I want to try and like hit that on the head and just take care of any of these questions that you guys have right now. So I'm gonna put a description right here of where all like the topics I'm talking about are in this video, because this is going to be a long-ish video. So if you have questions, just skip to this section or whatever is over there, and that way you can get the answer to that question. First off, yeah, the Fed cut the rate down to pretty much zero last night. What does that mean for you guys? What that means is nothing much, to be honest with you. The Fed cutting rate means that they're cutting the rate from the Federal Reserve to your bank, or to the bank, or to the company that I work for, or to the person that's giving you, the consumer, money, right? Because of this silly virus that's going around. Okay, it's not silly. I apologize. It's not silly, but because of this virus that is going around right now, the entire economy has stopped. Nobody's spending money because nobody's going out to eat. Nobody's buying anything. If you were smart, you would have invested in toilet paper and hand sanitizer 3 months ago. But a lot of us didn't do that. So the government is saying, okay, we understand that there is not enough money that is flowing through the economy right now, so we're going to pump $500 billion into the economy on a short-term loan to these banks, to these companies, to whoever, at a very low interest rate, so that we can get more money back into the economy. Now, some of you heard that they're putting $200 billion into mortgage-backed securities. Now, what does that mean for you and your mortgage and mortgage interest rates? What happened was, in the last 2 weeks, 3 weeks or so, rates plummeted for mortgage interest rates, right? They plummeted. They were all-time low. They were historically low, and your mother's hairdressers, dog walkers, babysitters, ex-boyfriend's baby mama, they all probably went to the broker, to the mortgage person, and said, hey, interest rates are great right now. I want to refinance. So all these applications came in. Application. It happened to me. It happened to everybody else out there. Us mortgage professionals, we are doing our best to answer all these questions, to get all these applications in. But what happened was all these people came in and said, hey, I want to get a new mortgage. And we're like, cool, great. Then the banks were like, whoa, we don't have enough money to give to you guys. That's where that $200 billion comes in, because banks only have so much equity, so much liquid cash that they can pump out to new mortgages every single month, every single few months, and then take that mortgage, repackage it up into a mortgage-backed security, and then sell that off to an investor, right? That's how the money is transferred. So essentially, all of you that applied for a mortgage last week are the reason why, which is a good thing, but you are the reason why they are pumping $200 billion into the mortgage industry today, starting with $40 billion today. That is why that is happening, because there's more money going out. There's more money committed to going out than there's money coming in, because people are going to have to pay old mortgages, and that money's going to have to get transferred to here, to there, and all this other stuff. It's essentially just a little small term loan to help float this economy. If you are a business owner, let's say you get $1,000, right? Somebody loans you $1,000 at 1% interest. Okay. You take that $1,000, keep 10% for yourself. You can take $900 and you loan it to person B for 3% interest, right? Now you're getting 2% interest and you're paying the other percent to the person that originally loaned you the $1,000. Now, if person C through Z comes by and says, hey, our rate's really good right now. Can I get $1,000? Can I get $900? Can I get some money? You're like, yeah. Hold on. Where are you going to get that money at? Right? The Fed is essentially ensuring that you don't lose your great interest rate that you locked in, because there just isn't enough money to cover all the new transactions, which is freaking awesome, by the way. So that leads me into my next point, okay? Are mortgage interest rates 0%? No. Stop that. Stop. watching this, stop telling people that is what mortgage interest rates are, because they're not. They are not 0%, and they're never going to be 0%. Why? Because I'm going to tell you why. So here's how mortgage interest rates are essentially calculated. Like I was saying earlier, the Fed gives the bank $2 billion. Let's just say $1 billion to make it easy. They give the bank $1 billion, and they say, great, here's $1 billion. We're going to loan you for 1.5%. You're going to take this percentage, you're going to take this $1 billion, you're going to loan it out to everybody in the world, in the country, and that wants to get a house, that wants to refinance a house, that wants to buy a house. And the bank says, great, yes, love it. They take that $1 billion and they spread it out to everybody for 3 to 6%, depending on your credit, your situation, all that other stuff. So you get this great interest rate, you get a good interest rate, you get whatever interest rate. You make your payments every single month. The bank collects their fees, their income, their revenue, and then they take part of that revenue, the 1.5% of it, and then they pay it back to the reserve. Okay? They pay it back to the people that they originally borrowed the money from. Usually, and then what'll happen is that Fannie Mae or Freddie Mac, one of those two organizations, are going to come in and say, hey, we want all of your mortgage-backed securities that are Fannie Mae or Freddie Mac approved. And I did a video about this just last week on my 3-Minute Thursday, so watch that if you haven't. And they're going to say, okay, we want these Fannie Mae or Freddie Mac loans, and this is what we're willing to pay for them. And then Fannie Mae and Freddie Mac package it up into mortgage-backed securities, and then they send it out to investors. Okay? So what does that mean? It means that the Fed gives the bank money, the bank gives you money. Okay? If the bank wants to keep their lights on, if they want to keep paying their employees, if they want to keep their customer service lines open, they have to take a profit. Okay, they have to take money. And if they're going to give you an interest rate of 0%, where are they going to make their money? They're not. They're not going to make any money because 0% interest means that there's no money being made on that loan that they just gave you. So, are rates going to get lower? Yes, maybe. I don't know, to be honest with you. Based off of analysts, what everybody's saying, yes, they are going to get a little bit lower. They're not going to get as low as last week. And if you missed out last week, that's on you. You should have listened to your mortgage person saying, do this right now. And if you didn't, that's on you. If it gets that low, I will eat my words and I will put my tail between my legs and eat crow because I was wrong, which I'm hoping that I am, because lower interest rates would be phenomenal again. But that is why mortgage interest rates are never going to be 0%. Now, also, these people, like I said in my post yesterday, actually, the post that I made yesterday on my Facebook page and Instagram, something is only worth what someone is willing to pay for it. Okay? So, Fed gives bank money, bank gives you money, you make payments to the bank, bank sells off your loan to Fannie Mae or Freddie Mac, typically, and Fannie Mae, Freddie Mac take this loan and package it up into a mortgage-backed security, and they send it out to investors. Well, investors are going to look at it and say, well, we're willing to pay this much. This is how much we're willing to pay for these mortgage-backed securities because X, Y, and Z factors. That right there is what determines the actual interest rate that the bank is able to charge to you. And that is what's determining what the interest rate the Fed is going to be able to charge the bank, because essentially people have to make money. That's the bottom line, is that we all have to make money somehow. And if we're not making any money, then we're not pumping money back into the economy, and therefore we're going to go into a recession. So they have to make money somehow. Right now, because of last week, investors are scared. They're scared. Let's be honest. That is the reason why mortgage interest rates skyrocketed last week, because everybody's like, oh my God, what the F? What is going on with the market right now? And that is the situation. That is what happened, is that the market went berserk. It threw a temper tantrum and people got scared. People pulled all the money back. Everybody freaked out. Like, ouch! I'm not going to spend any money because I am scared to do this. And please stop doing that, please. Because trust me, you want to keep your money in the market to continually allow this market to flourish. So, what can you do to capitalize on this opportunity? Well, first off, if you are in the position that you want to refinance your home and you haven't applied yet with anybody, go apply. Talk to somebody. Talk to your bank. Talk to me. Talk to your broker. Talk to somebody. Because these people, your mortgage professionals such as myself, we've already got a list of people that have applied, that have submitted their documents, that have filled out the credit applications, that we have pulled credit on. We have determined that this is what you need in order to refinance. And they're like, cool, here you go. Here's all the information that you need. And we're like, great. And then they say, the client, if my rate drops, or if the rate drops to X number, and it's within a certain threshold of X number, lock my rate in. Lock it in. Lock it in. So people like me, mortgage professionals, we're literally going every single morning looking at interest rates with me like, all right, cool, interest rates are this today. This is what it's going to be for this person, yada, yada, yada. And if it's at a certain point, they're going to lock it in. Now, you, on the other hand, if you didn't apply and you're just sitting there twiddling your thumbs and you're just like, I'll just apply when the rates drop again, and it's okay. Like, it's okay. It's fine. You know, it's a really quick process. My person's really fast. That's your gamble. That's on you. Okay. Because when you finally decide, hey, this is what I'm going to refinance, you're going to fill out the application. You're going to submit all your documents. You're going to run credit. You're going to do all these things. And your mortgage person is going to be swamped with everybody else that's doing the exact same thing as you. Don't be that person. Get it in when it's early. Get it in when you have the availability and the time to do it, because get ready for when that moment comes, because it's probably going to come. And if it does come, you want to be ready. Okay. You don't want to miss out on this opportunity, which leads back to my point of there's all these people that are trying to get new loans and there's just not enough money going out. So that's why the Fed's dumping all this money into the economy. What does that mean for all of this? As of today, mortgage interest rates are good. They're not great. They're good. If you are somebody that wants to refinance your home, I cannot stress this enough. Please, please, please get your application in today. You can get it in with me at dtmg.me/apply. You can get it in through my website. You can get it in through whoever you want to work with. Just work with somebody. Okay. Work with somebody that has your best interest at heart and knows what they are doing. Because I'm going to throw a ton of people in the mortgage industry under the bus right now, but there are a ton of people out there right now that have absolutely no idea what they are doing. And that's fine. We were all there at one point in time. We all had, at some point in time, no idea what is going on. If you are wanting to refinance, get it in now. Get that application in. Get ready. So let your person know, hey, if it drops to 3.25%, lock it in. Like that. Great, cool. If it happens, I'll do it without your permission. Just going to get it done because you told me to do that. So what do I think is going to happen next? A lot of people have been asking me this. What do they think is going to happen in the future? What do I think is going to happen 6 months down the road? And I honestly have no idea. Okay, we're pretty much looking at a recession. Right, unless there's a cure or some sort of vaccine that's going to help slow down the spread of coronavirus, COVID-19. And if there is one, then that's going to help the economy, right? Because then people are going to be able to go back outside. All these bans are going to be lifted. People are going to be able to have a life once again. And if they have a life, great. That's awesome. We can then go about and do all the things that we want to do. But without that, nobody's spending money. So in the next month, what do I think is going to happen? I think the market's going to crash just a little bit more. Just a little bit more. And I think it's going to crash because it needs to. Let's be honest. It's been this inflated market for the last 11 years, last 11 years now. And it needed to reset. It needed that. It needed to reset. Nobody knew that a virus was going to be the reason why it reset, but it needed to reset. And it is doing that just right now. So I think the market's going to crash a little bit more. What is that going to do for you? Well, for those of you that are freaking out about your 401k balances right now, I get it. Like, it sucks. But unless you're retiring in the next 5 to 7 years, that really doesn't matter to you right now, because those are your retirement accounts. Those are accounts that you're not going to have to worry about for the next 20, 30, 40 years. And if you're not worrying about them for the next 40 years, then don't worry about them being where they are right now, because this is going to happen again in the future. We're going to go up, and then we're going to go down, and then we're going to go back up, and then we're going to go down. It just happens. That's what the economy does. So don't freak out about it. Yes, it sucks. The number is mind-blowingly low. I get that. It hurts everybody. What are you going to do? You have no need for that money right now, right? If you were smart, you would have pulled it out 6 months ago, sat on it, and then when this happened, dumped everything back in and just allowed it all to grow back up. But you didn't do that, most likely. I didn't do that. I should have done that, but I didn't. And that's the situation that we're in now. Anyway, everybody, thank you for watching this video. Thank you for listening to me rant. I want to answer all of your guys' questions. I want to be able to answer these questions. I want to give you insight on what's going on in the market right now. I am by no means a stock market expert, but I am definitely a mortgage expert. I follow mortgages because it's my job, it's my career. That is what I love. That is what my passion is behind. Therefore, I'm going to be able to get that information and relay it over to you. So if you have questions, let me know. If this video didn't answer a question for you, shoot me a message, post it in the comments down below. Let me know what your questions are so that I can explain those in the most layman of layman terms, because yeah, this shit is really just kind of confusing sometimes. And that's just how it is. Let's figure this out together. Let's figure this out so that I can give you that information so that you can be educated, so that you can know what is going on, because knowledge is power, you guys. Knowledge is what's going to be able to allow you to get past a certain point in your life, because you now know what you need to do in order to get to that next step. So, Dane the Mortgage Guy here, you guys. Monday, it is now 8:02. This took me 20-some minutes to record, and I don't even know how long this video is going to be, but thank you guys. Best of luck to everybody. If you're looking to refinance, please do let me know, and I would love to help you. If you're looking to purchase a house, okay, bonus tip. Hold on. I got this. I got to add this part to it. Purchases. If you are in the market to buy a house right now, yes, this market is nuts. Nuts. Be patient. That's all I got to say. Just know that companies such as mine, like Movement Mortgage, they're going to put our purchase clients ahead of our refinance clients, right? And the reason we're going to do that is because purchase clients have a time frame. They need to be able to close a deal in X amount of days, whereas refinances, everybody's kind of just like, man, whatever, let's just take our time with this. Purchases, we know that you are a priority. We're going to make sure that we make you a priority and keep you a priority so that you can be able to buy the house that you are looking for. Anyway, everybody, thank you so much for watching this video. Thank you so much for putting up with my ranting. Thank you so much for following and taking this journey with me. And if I can be of any assistance to you, please do let me know, because I would love to be able to help you and be able to get you on that track to your financial success. So, love you all. Let's go get some coffee, maybe virtually, or you can come to my office and hang out, because we disinfect our office quite often. And I will talk to you guys soon. Cheers, everyone.